to work. Okay, so I just wanted to show a couple of quick charts here on some trades that set up. This is the YM contract. It's only $5 a tick. We've started to track this instrument because it's been getting some good movement. It's the mini Dow, and so with some tight initial stops, your trades aren't really, you're risking like $50 to $70 a trade. And just quickly what happened here, this is our 12 range guidance dots, so you can see that after the news event we were pretty much looking for long trades here. And most of you know that's part of the pro package, these guidance dots here. Excuse me, so that was keeping us looking to the long side. Here we had a little patch of consolidation before the market opens. And we did have a little pop here pre-market. Market opens at 6:30 Pacific, that's right about in here somewhere, kind of right in there. So you did get this little pop. You get a little pop right here, right at the open, and then you had a retracement that set up a yellow bar probe trade. Now, if you recall, we called out I think it was 05 or 08. Wasn't that the entry? I think we called 05 or 08, and I wanted to show why we called that level. It's because of this little patch of consolidation you had right here. Of course, you had a nice break, pulled up, pushed up through these pivots, had another consolidation. If you missed the initial break, of course, you could have got in somewhere up here and got the rest of the pop. A couple nice long trades here, and then you had what turned out to be, of course, right around coming up to the 7 o'clock mark, a double top. So you had one more kind of pullback here. You could have came in and caught this final push back up to these pivots. And notice how very nicely it kind of goes from pivot to pivot, just like NASDAQ. Got just kind of pivot to pivot, moving up, moving up. These are all places where you can get in on a break or take some profits. Now, it doesn't look like much. I mean, you might say, well, Charles, this really doesn't look like much of trades here. But, this trade here, for instance, depending on where you got filled and got out, I think this one was about 20, 25 ticks. So there's $1.25 on that one. And I think depending on your fill down here and where you got out around this pivot, I think you're looking at the better part of 50 ticks plus on this one. So at $5 a tick, you can do the math. That's $250. You got a little pop at the end here. I mean, say you caught part of all three of these, you're looking at $400 to $500, three little trades. That's why by the time we got over here to 7 o'clock, we started saying, well, you might have two, have one or two and done. And I know a lot of traders would be pretty happy with $400 or $500 in the first half an hour trading. So, yeah, all in all, pretty good morning for YM. Now, we had something similar happen on EMD, although the retracement was a little deeper. Let me show that one real quick. You can see the price action, of course, on all these equities was very, very similar. I like to use a 10 range guidance on EMD myself. I know it's a little tighter. That's just personal preference. But for me, sometimes it reacts a little quicker on a trend change. You can see over here, pre-market, we had a little consolidation patch in here. Pull back right before the open. The open's right in here, 6:30 Pacific, right in here. Comes up, hits the head of the pivot, hits the head of the pivot, hitting its head at the pivot. And then, of course, you see we break and we get a little long trade here. Pull back, get a little consolidation patch under the pivot. Boom, up we go, and we go right to the next pivot. If you recall, when the markets were peaking here, we were saying, watch this level, 85. Watch this level. Watch for a reversal. We teach these in the webinars, by the way. If you come to the webinars, you see we spend a lot of time getting into not only entry strategies, but exit strategies. Where's good places to take profit. You don't have to give all your profit back or half your profit back on these deep retraces. These pivots sometimes are really good logical areas to get in and out. Then, of course, just like YM, you see pull back for a deep probe retrace here, and then boom, double top, giving you a second chance to get out, kind of up in this area here, just shy of this pivot, right in there. Now, what was interesting on EMD is that it pulled back. It was funny because it kind of moved a little quicker than the other equities did, but it came right back to this little patch. See this little pivot here at 80, just a tick under 81, and it kind of did this nice little consolidation patch for about 10 minutes. I don't know if anybody's watching that. And then right here you had a little support area. This is where the guidance dots were kind of holding you along. And, of course, you see it did not break to the upside, so that turned out not to be a bona fide long trade here. That did not happen. It did quite the opposite, setting up a little short trade. Here again, this might not look like much. This little break here, depending on where you got filled, around 79-ish. And depending on where you exited that trade, let's call it a round number, 81. You know, you might have got 20, 25 ticks out of that trade, $200 maybe on that little pop. Doesn't look like much, but it's a couple $100. And over here, of course, depending on your entry, when it came back under this pivot, the fill might have been 81-ish for the re-entry. In here somewhere, see it? It popped up here, and depending on your exit around the pivot, you might not have got 85. Maybe you got 84 and change. So what was that? It's 35, 40 ticks. This trade alone, if you just popped that one, would have been around possibly $350 to $400. And that's one contract. We're just talking about one contract here. EMD, of course, $10 a tick. Say you missed this first one and you caught the second one. That's what we were saying when we got to this double top again over here. You could possibly have a one or two and done situation here on EMD as well as YM. I like tracking those two myself in the morning. I do keep an eye, like in the room, on I keep an eye on NASDAQ too, and of course the Russell. I just keep an eye. I don't trade them very much. Sometimes I'll take a NASI trade, depending on if it's really moving nicely, like Rich showed a few minutes ago. But I like to keep an eye on them because one sometimes leads the other. So, for instance, you might see the Russell, you know, if you're looking for kind of some trade setups, maybe the Russell's starting to run and it's going to pull the other ones with it, or vice versa. So sometimes, you know, but if you find it confusing to watch all of them, just pick one or two that you like and then track and trade those. That's pretty much it. Just those two charts. Any questions on some trade recap here from this morning? How do we all do? Everybody do pretty well this morning? Everybody make some money? Some nice pops early. This is the sweet spot of when we look for trades, by the way. But basically from this 6:30, you know, we generally don't get right in at the open. We usually wait a couple of 5-10 minutes for that first pop. Here we got it. All the equities getting a little pop-a-roos. And then here's your 6:40, 6:45, get another move. 7 o'clock sometimes, you know, not always. We get these V-shaped bottoms, V-shaped tops. And then usually after that you get maybe one or two more trades. But, you know, you can be selective. You don't have to take all the trades that come along in the span of a morning. I think what we're showing here, you can simply take one or two. That's all you need, really, and that can make your whole morning. One or two trades. That's all it takes. All right, guys, that's all I had today.
All right, I just want to point out that Blue Bar Probe we called up there in the NASDAQ is working out really well. We went out and took the swing lows out. If you stayed in that trade, you got close to 40 ticks in that.
This one right here?
Yeah. Yep, that's a trade.
There was the retracement. Came right up to that little pivot. This has been a funky little pivot all morning right here. It's just NASDAQ just hits its head, bounces, or does whatever it's going to do. Hits its head, and down she goes. I think all the markets start rolling over up there. Mm-hmm. Take a look at see how it kind of goes. This, by the way, if you like these pivots and the guidance dots and what have you, this really works well sometimes on NASDAQ. See how it rolled and then broke? Kind of goes from pivot to pivot, down to another one, down to another one. Yeah, very nice. Excellent trade. Here was the other one you were showing here. Sort of deep retracement up into here. Mm-hmm. Right like that. Yep. She rolls over, takes out support, down she goes.
The line in the sand way up there.
Mm-hmm. Yeah, those are pretty low-risk entries. You know, your stops are pretty tight. You know, you're trading in the direction the market's going, and you got to kind of know where to get in and out. You look for little reversals around pivots, take your profits, stand down, patiently wait for re-entry, watch for the setup, take it, boom, and there you go. Could have banked a little coin down here possibly when she came back up through 34. Let's see, what would that be? Say you got filled short around 41-ish or so, taken out around 34. 7 times 4, well, almost 30 ticks. $150 trade right there. The nice thing is they come along. You know, we say this all the time. It's like jumping on a train or a plane or a bus, right? You just patiently watch for the setup. When you see it, you put in your order. Put in line trader. You like the line trader? It's very good. Quasi-automated strategy kind of deal. Gets filled, manages your stops and your targets. And when you're done and you're happy and you hit your profit goal for the day, just go into sim or take a break or, go do something else. Play some golf or whatever you like to do, tennis.
Don Tony plays chess.
There you go. Yeah, it's always good it's healthy to have a good hobby. Get your mind off of trading, and then you find when you come back to it, you're all fresh. You're fresh and ready to look at things differently and pick something up new. Yep. Ron says he took the trade, but he chickened out and just scalped it and didn't write it down. Hey, there's nothing wrong with that. I mean, here, you could have had a little pivot to pivot pop here. You bip in and you bip out. I mean, there's nothing wrong with taking some profits. If you only want 10 or 12 or 15 ticks, it's $50, $60, $70. You do that a couple, 3 times in the morning, and you're up $250. I know a lot of traders be happy with $250 in the morning. You felt almost no heat at all. Rolled over, boom, down she goes. Yeah, we see some folks typing in that they have maybe some mid-size or smaller accounts. That's okay. We understand. We got lots of traders that have all sorts of different programs going on. Some with larger accounts, some with smaller mid-size accounts. That's why you got to vary a little bit what you trade. NASDAQ $5 a tick, 15 tick stops, 10 tick stops. You're only risking $50 to $75. Now EMD, of course, it's a little beefier. It's $10 a tick. 15 tick stops, you got to be able to stand a little heat. 100, 100 and a quarter, maybe 150. You got to give some wiggle room sometimes on your trades, and that's, for some traders, that's a little beefy, 150 tick stop. So it's a function of your risk tolerance, and we really drive that home in the webinars. You really got to understand your risk tolerance. Very important thing to know. Even before you come in and start trading, you got to really kind of get a handle on that. Okay, well, do you guys have anything else? I think that's it for me.
All right.
Gary, anything else you want to show today?
No, it looks good.
No, I think I'm good.
All right.
Luke had asked a question, and did y'all answer that? I had to step away a second. What instrument would be better to trade after midnight Pacific time?
Midnight Pacific time. Asking to find a market.
Well, I like the FGBL is a nice one. 6B, although 6B can be kind of choppy. You can go over and trade the CAC 40 on the Matif. The NASDAQ is not a bad instrument. And the YM. Those are smaller instruments you can trade. And the dollar index. All right, you're welcome.
Yeah, that's good. Let me just show one last thing here on this Forex Factory. Everybody should have this bookmark. This is where we go for our news that might affect the currency markets. So when you talk about the European session, so you're basically talking about perhaps trading the currencies or equities overnight after midnight Pacific, 3 o'clock Eastern. You got to keep an eye on some of these news events, particularly if like the dollar and 6B. For instance, sometimes you'll get some strong British pound news coming out in the middle of the evening. So if you're trading Forex like dollar cross pairs or 6B or the dollar DX, you got to kind of keep an eye on these. 1:30 Pacific, 4:30 Eastern. What I'm saying is this: if you're going to trade those instruments, you got to be aware of any news events coming along that could move the markets. And keep an eye out when they comes out so you don't get whipsawed ahead of it, putting on a trade ahead of some serious news, say 6B or the dollar, it comes out and you get that shotgun effect. So just be careful overnight. Really time yourself, look for good entries, be careful. This comes along quite a bit. Let's see last night, what do we have? Anything overnight? Yeah, see some more British pound news here. Usually around 1:30, 2 o'clock, you get some Euro news coming in. British pound news, 6B moving around. 6B 6 1/4. Dollar index DX is $5 a tick. If you're on the right side of the trade, you can make a little bit of money, and if it flips on you, you don't get beat up too bad. So for mid-size, smaller accounts, those are good instruments. Yeah. Okay. All right. Well, I'm going to stop the recorder.